if they're going to go for an alternative, they're going to go for gold. And I think that's going to wake humanity up to how important gold is as a monetary asset.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 7th through October 14th, 2024, while supplies last. First, we feature Australian silver kangaroos at just $2.99 over spot. Next, backdated 1-ounce gold Canadian maples are just $60 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Innecco from the very popular Innecco64 YouTube channel. Mario, thank you so much for joining us today.
Oh, you're welcome, Elijah. Nice being here again with you.
It's great to have you. I did want to discuss the upcoming BRICS meeting. A lot of people are expecting them to roll out a BRICS currency unit that could be potentially backed by gold. Do you think it'll happen this meeting? And what do you think the implications of that would be?
I think they will announce something. I'm not sure it's a currency. It's just a trade settlement mechanism. They're going to call it, I think, the unit. And it will be 40% gold-backed. That's the plan. And 60% backed by fiat currencies, i.e. if a country has 40% of their reserves in gold, they'll have the other 60 in different currencies. And I think there's a limit to how much you can have of the other currencies. And I think they will announce something. Whether it's going to be up and running very soon is another question. But I've noticed that the trade amongst the BRICS plus countries is less than, I think, 35 or 30% in dollars and euros now. So it's growing, it's moving that way. And the reason they're using gold is because they're not going to use the dollar. And the only thing really that you can trust as a monetary reserve is gold. I mean, people have been fooled for the last 50 years into thinking that dollars and U.S. treasuries are safe. I think that's the whole problem here, is that people are going to realize they're going to realize the most powerful countries outside the West. Well, if they're going to go for an alternative, they're going to go for gold. And I think that's going to wake humanity up to how important gold is as a monetary asset.
No, I think it's really interesting because it seems like they are most likely going to move forward with this. And if they reintroduced gold into the monetary system, it seems like that could be really a whole different ballgame, right? Because you have the rest of the currencies of the world being fiat currencies not backed by anything. And then you have this one currency that's actually tied to something real. Do you think that'll put pressure on the other currencies, especially the dollar?
Oh, yeah, it's already doing so, even though gold is going up, not just in dollars, but also in euros, British pounds, in Japanese yen. I mean, Japanese yen, we're almost at 400,000 yen per troy ounce. And even in the own BRICS fiat currencies, it's going up. But I saw a report from the Jerusalem Post the other day that Russia has 31.5% of its reserves now in gold, and I think that's going to keep growing. Oh yeah, it will definitely be a problem for the West, for government bond markets, not just U.S. Treasuries, but UK gilts and European government bond markets. These countries, they're not going to, they will not buy as many Western Treasuries and government bonds as they normally would have if they weren't going into a gold-backed system. And that's going to put pressure on bond yields. And we've seen bond yields rise ever since the Fed cut rates on September 18th. It might be a little bit of the market saying the Fed is done too much in terms of cutting the things. Inflation's still pretty strong. But I think it's also to do with the fact that there will be a lot less demand for our paper, which, as you know, is you can't pay off fiat currency. The only way to retire fiat currency is to issue more and more debt. In a gold-backed system, they'll be able to settle trade, extinguish debt with gold. That's what people don't realize, that with gold and silver as well, you can extinguish debt. That's how you pay a debt. Someone comes with a promissory note or a fiat currency, and you give them the gold and silver, and you've settled the debt.
So what you're describing seems to maybe put the Fed in an interesting position, because, they're cutting rates right now, but if there's not demand for U.S. Treasuries, or not as much demand, that seems like that would raise interest rates, not lower them. So how do you think the Fed will figure that out?
Yeah, it's already happening. As I said, we saw the 10-year yield go down to 3.6. Now it's above 4. Last time I checked. It might have moved a little bit, but the only way to solve the problem of a dearth of demand from foreigners is for the Fed to stop QT, which is quantitative tightening, unwinding its balance sheet of U.S. Treasuries, and then resume doing QE. But that in of itself would put a rocket up the gold and silver price, and it would mean more and more devaluation for the dollar, but they might not have a choice. We could have also, apart from the Fed, we could see the Fed with the Treasury introduce new rules for pension funds, force them to buy a certain percentage of Treasuries to raise the demand domestically. Who knows? A lot could happen, but in the end of the day, it's going to hurt the dollar, I would say.
Now, you recently interviewed our mutual friend, Clive Thompson, and he was talking about how there might be a second wave of inflation coming. Can you tell us a bit about your conversation with him, and kind of what are some of the reasons why there might be a more inflation coming? Because it seems like the Fed is banking on that, inflation is pretty much over.
Yeah, well, there's a few factors. One of them is geopolitical. In Middle East, that's always like in the background, and it could rear its ugly head in that a bigger conflict there could mean that Iran might stop oil flowing through the Strait of Hormuz. That would make the price of oil go a lot higher. That would raise prices, and it would be considered inflationary. The other one I would say is the Chinese stimulus, even though a lot of commentators in the West don't think the Chinese have given enough details and that they're not going to do enough. But from what I've seen is the fiscal stimulus has to be rubber stamped by the National People's Congress in China, and that's why they haven't come out with the details. But I think the Chinese are going to be very accommodative, not just monetarily that we've seen already, but also fiscally. So that's going to put a lot of demand underneath the commodities market, and also looking back historically in the 70s, there were 3 waves of inflation. And it's not far-fetched to think that we're going to see another 3 waves, because things always come in cycles. And don't forget, back in the 70s, we had a lot less debt as a percentage of GDP, and now we don't. So, and I think also the Fed and the Treasury, everyone's worried about the economy slowing down. So, we could have some kind of stagflation and the second wave.
Now, with the U.S. elections coming, do you anticipate that impacting inflation at all? I mean, my perspective is maybe Biden sped up some inflation and the Democrats might speed up inflation, but at the end of the day, it's more of a monetary phenomenon rather than, just government policy. It's more has to do with what the Fed is doing ultimately than policy.
Yeah, the Fed, but also fiscally. And if you remember well, when we had lockdown, that was 2020, beginning of 2021, and the Fed printed trillions of dollars. And this was under the Trump administration. And yes, the Biden administration came in and they passed a lot of new spending, but so had the previous administration. We were running an almost 6% budget deficit in 2019 already. I agree with you. The Fed is going to determine things because it is a monetary phenomenon. But the debt situation wasn't, the debt went up also a lot under Trump, as it's going up under the Biden administration. And some people that are even pro-Trump, people that I've spoken to, they think that with a lot of tax cuts that Trump is promising, you could see a lot of inflationary pressure unless you see government spending being reined in. And we know that Congress and cutting government spending don't really go hand in hand. Both parties, they seem to always want to spend. And with all the geopolitical situation going on in the world, all the proxy wars, I don't see Congress reining in any spending. And I think Donald Trump, in one of his debates, it might have even been the one with Biden, I'm not too sure. He promised to make everything whole in terms of all the unlimited liabilities that the U.S. government has. So either government, whoever wins, I don't think things are going to slow down in terms of the inflationary pressure. And the underlying reason why I think that, Elijah, is that you can't, you got to keep the fiat currency debt-based system going, because if you slow down, everything implodes. So even under Trump, that's going to happen too. So that's the way I see it.
Now, when it comes to what we're seeing in the gold and silver markets, I wanted to get your take on that, because obviously we've seen new all-time highs around 2,700, a bit of a pullback here now. But do you think this is mainly because of the BRICS nations buying gold and possibly rolling out a gold-backed currency? Or do you think, if they announce that, then we'll maybe just kind of see maybe a reduction in purchases? Or do you think we have a lot more to run from here?
Yeah, I think definitely the BRICS nations that have been acquiring gold, since 2022, if you remember, 2022 was a record amount of net buying for central banks ever since the Bretton Woods Agreement in the 40s. And last year it was almost the same amount. And it's not just BRICS nations. You've had countries like Poland and other countries that are not in BRICS buying a lot of gold because they see the writing on the wall. I think that people are concerned of leaving their reserves with the U.S. or with Europe. It might be frozen or confiscated. And as I said earlier, Russia, they're up to like 31.5% of their reserves in gold. And it looks like the target is going to be 40. So I think they're going to have to keep buying gold. And don't forget, these reserves always change depending on international trade. So I don't think it's going to stop. And I think eventually countries in the West are going to have to catch up as well. So I don't see any slowing down in the purchasing of gold. But I think... the price has been driven more by the central banking sector the consumer, the retail market in the West is not that strong, even though we're seeing anecdotal evidence, some proof, or maybe some stories that show that people are starting to wake up, they're selling gold at Costco now, and that they're running out of gold. So yeah, I think there's still a lot to see in the gold space, especially on the retail side, not just in North America, but also in Europe. And if you add that to the central banking buying that I think is going to continue, yeah, we're just in the beginning, I think, Elijah, of this gold bull market.
And as for silver, we've seen silver sustain over the $30 level, and a lot of people are looking for a potential breakup coming soon. Your take on where silver is right now?
Yeah, I mean, silver is a much easier market for the bullion banks and the central banks to control because it's a smaller market. But I think they're running out of rope because there's a lot of physical, real demand for silver from China, India, and other countries. And eventually they'll have to cover these massive short paper positions. But the level that they're trying to defend right now is around 32.50 or even 33. I think we almost touched 33 a week or 10 days ago. Yeah, I do expect eventually silver to outperform gold. But you need to remember that silver will be a lot more volatile on the way up and down.
Definitely. And if our viewers are interested in learning more, they can go to your YouTube channel, Innecco64. Do you have any last thoughts for our viewers? And tell us a little bit about what they'll find on YouTube.
Yeah, my YouTube channel at Innecco64. It's the home of alternative economics and contrarian views. And I post a video, every day. On the weekend, I do a live stream on Sunday at 5 p.m. Eastern Time. I'm based in the UK, and I try to answer as many questions as possible during the live stream. And and we focus on sound money, small government, and free markets, which is something that we lack, unfortunately, everywhere around the world. But we got to keep, trying to tell people that there is another way other than big government and central banks and inflation. That's what I try to do on my channel, and I try to keep in touch with the markets, with interest rates, the gold market, and currencies as well, which I think is really important.
Fantastic. Well, Mario, really appreciate your time today. As always, thank you so much, and God bless.
Thank you, Elijah. God bless.
This is Kaiser Johnson with Liberty in Finance, and these are the Miles Franklin Weekly Specials for October 7th through October 14th, 2024, while supplies last. First, we feature Australian silver kangaroos at just $2.99 over spot. Next, backdated 1-ounce gold Canadian maples are just $60 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.